Hello there everybody, Max Norbury here, and in today's video we are going to start our institutional psychology journey with security bias. Now we're going to learn about what security bias actually is. We're going to be looking at how and why security bias adversely affects retail traders all around the world. We're going to look most importantly at how to minimize the effects of security bias whilst looking at some live examples, and then we're going to tie it up by looking at what's due next in the next institutional psychology video. So ladies and gentlemen, without any further ado, let's get cracking on. So what even is security bias? Well, I'll tell you. Security bias is the bias in which makes you rely on only the information, only the news, or only the views that support your initial market bias. So let's say, for example, you have a bias short in pound against the dollar. Well, you're only going to be taking in, digesting the news or the information or the noise that supports that initial bias. Now, why do you think security bias would adversely affect retail traders anyway? Well, if you think about it, suffering from something like security bias and only focusing on the information that supports your original bias in the markets, that's going to lead you into a false sense of security. Remember, as traders, we're always trying to work out the probabilities of things. What is the probability that the market is going to go against me? What is the probability that the market is going to go in my favor? Just by answering this question and being able to define the differences between the two, you're going to have to look at reasons why not to take the trade, on top of the reasons why we should. So ultimately, someone who's suffering from security bias is going to ignore the information that naturally lends them to go against their original bias, and so therefore shields them from any early warning signs or any potential problems that could arise in the trade over time or in their bias before they even take the trade. So let's take a little look at a couple of live examples of how security bias could affect you in the markets itself. So let's have a look at this chart, for example, in the Euro USD. In the Euro USD here, we've been trending down for a while now, forming lower lows, lower highs, stuff that you may or may not know indicate a bearish trend. Let's say, for example, that we are feeling good and all the information, all the indicators and all the news is saying Euro USD sell-off. It's big old sell-off in the Euro USD. However, off the back of the Euro USD, there is an economic event coming out. And let's say, for example, that economic event is the federal interest rate decision. And let's say interest rates for the US dollar are starting to decline. So it means interest rates getting dropped means generally the currency will go with it, which means the dollar will be getting weaker against the euro. In turn, the market could rise. Okay? But that doesn't support your bearish bias. And you're a member of a trading group and they're all short the Euro USD and you're short the Euro USD, and you're looking at certain bits of information that are only supporting your short bias in the Euro USD. So you go short. Okay, you've taken a short in the Euro USD. So we have this really nice big candle. We short the Euro USD. Everything's looking great. And then the interest rate comes out and it's a miss. And the dollar's interest rate actually declines, which means the dollar gets weaker of the euro, over the euro. So then the market comes right back up and we get stopped out. Okay? We get stopped out of the market. That right there in a nutshell is security bias. Not taking into account the fact that interest rates in the dollar were expected to fall because it doesn't support your bearish bias in the Euro USD. Okay? So let's get back to it. So now that we've had a look at some of the problems that we can face as a result, we know what security bias is, how can we look to minimize its effect on us moving forward? In short, we have to seek information that challenges our trading bias. Our job as traders is to ultimately build on the probabilities that the position will go in our favor. But we can't just look at the positive probabilities for our favor, for our bias. We have to look at the negative as well. And just by the very definition of probability, there are two sides to that coin. There are going to be probabilities going against our bias and probabilities that are going towards our bias. And we need to take everything into account before we take the trade. It's always important to ask yourself why you are wrong rather than why you could be right. Hello there everybody. So we've learned everything there is to know about security bias. We know that security bias is a very, very prominent issue for many traders out there. We know how it adversely affects you. We looked at some real live market examples of security bias taking effect. And most importantly, we learned how to minimize its risk. Now we're going to be focusing in the next video on information bias. What information bias actually is, how it adversely affects the retail traders around the world, including probably yourself, and most importantly, the processes that I've put in place as a smart money trader to determine useless versus useful information. So everybody, I can't wait to catch you in the next video. Take care, good luck, and I'll see you then.